Hello and welcome to Business Incorporated, coming to you live from our Lagos studios here in Nigeria. I'm Chimezie Obi Iwago. On the show today, as South Africa's President Cyril Ramaphosa prepares to present his manifesto on Saturday, market analysts hope for more stable policy environment. Kenya budget deficit forecast to fall to 5% of GDP in 2019 and 2020. Plus, Tanzania finds Acacia mining for breaching environmental regulations. First, the market, and it was all green for the markets in Africa at intraday. However, Egypt is closed today for the weekend. At intraday today, the Nigerian stock market maintained the positive sentiment which started on Thursday, trading high at 0.32%. The JSE index was also up 0.69%. Kenya closed 1.51% up on Thursday. And markets in the Middle East are closed today, but continued to see gains on Thursday, with Qatar hitting the highest in nearly 2 years. The Qatari Stock Exchange was up 1.17%. Saudi Arabia stock market was up 0.78%, with petrochemical company Saudi Basic Industries adding 0.5%, and Saudi British Bank rising 2.3%. The Dubai index was up 0.23%. Abu Dhabi's index up 0.18%. And stocks in Europe traded slightly higher on Friday as investors tried to navigate through political uncertainty across the globe. Brexit talks is also still ongoing. Now let's bring in Annette Wisbert to tell us more from the European space. Hello, Annette. Good afternoon and Happy New Year. Good to have you back on the show.
Happy New Year to you as well.
Thank you. Our UK lawmakers are voting on Brexit next Tuesday, just as S&P warns its ratings on UK banks could be revised if Britain is forced into a disorderly exit from the EU. What is the outlook for the UK and EU markets in the coming week?
Well, actually, all will depend on what's going to happen in the United Kingdom. There are already rumors that a Brexit deal could be postponed. So it's literally unknown what's going to happen, whether Theresa May will kind of do the impossible job to get it through Parliament. It's highly unlikely. But whether there will be a second referendum or not, it is all up in the air, to be fair. So the most dominant scenario for the markets is that there will be more volatility, especially when it comes to markets close to the UK. For example, Ireland is so much depending on free access to the UK market that it's kind of crucial to watch what Ireland is doing. But of course, everybody else as well. The British pound will be probably quite on a volatile session next week, and the general market itself as well. So, of course, Brexit, if it really comes as a hard crash from the European Union, also Europe will feel it very badly, because we have a lot of trade flows going back and forth. We have a lot of investments in the UK. So it should be avoided by all costs. But whether this is possible on the political side of things, we don't know yet.
All right, let's look at the technology space. Tech giant Apple Incorporated says it plans to launch 3 new iPhone models this autumn. Will this be a game changer for this global leader in phone making and offset its weak sales in China?
Well, probably not, because what we are seeing currently with a lot of technology companies, that demand is going slower and slower. And we just had the profit warning from Apple last week, citing especially China. But if you look through that press release, then it was also clear that not only China is slowing down, but also major markets like the US, but also Europe is slowing down. And probably we're coming to a certain saturation level when it comes to replacing phones again and again and again. So we have a slower replacement rate or churn rate when it comes to phones, meaning that this most likely won't be a game changer, but clearly also a positive thing, because it could boost sales a little bit more for Apple in general.
And European consumer goods leader Unilever is fighting rivals in the foods market by introducing a new ice cream, which is high in protein and more like a dessert. So what's your favorite ice cream, Annette? And how is the ice cream market in Germany shaping up?
Well, actually, it's funny because I did a little research for that question. And this year in Germany, or last year, I should say, was a record year almost for ice cream because our summer was so hot. So on average, every German was eating 6 or 8 liters of ice cream just last year. So quite a lot. My favorite ice cream is, it's a bit of conservative, but it's lemon sorbet. And yeah, the question would be quite clear. What is yours?
Well, mine is vanilla, but you know, health-conscious people, we are always health-conscious. Thank you for your time, Annette, and enjoy the rest of the weekend.